Mr. Ajay Baga is a market expert. He is now joining us live from Mumbai. Mr. Baga, good to see you and welcome. Investors will watch the Fed's policy direction and even decision, trade developments and even further inflation data for market direction this coming week. Your predictions and how do you think that will play out?
See, Fed will stay on its previous stance of being data-driven, saying that we are not clear on the impact of the Trump policies yet on the broader economy. So we are not taking any call right now. And they will say we are happy with the inflation trending slightly downwards, but it stays above our 2% target. So for now, we are watchful. We see the economy continuing to do well. We see a strong labor market, and we still see uncertainty geopolitically and based on Trump policies. So we'll be data driven. We will be working meeting to meeting. And right now we don't see any reason for a rate cut. That's the expectation from the Fed for next Wednesday.
Mr. Baga, what do you think is causing the fluctuations in the markets that has been happening for the past month or so?
It's the uncertainty. It's the uncertainty unleashed by organized chaos, which is the policy of the Trump administration. So a lot of uncertainty. You can't really build a business model when in the morning 50% tariffs are announced and by the evening those are cut down to 25% tariffs, when friends and foes alike are brought into a tariff umbrella and there is too much noise in the system. So overall, no senior corporate will say anything on this because of their fear of retaliation. But if you look at how the business sentiment is performing, that's really reached levels of 2008. We are seeing consumer sentiment go down very strongly. Yesterday, University of Michigan consumer surveys showed sentiment really getting very spoiled. So it's the uncertainty because of the Trump policies. We'll have to wait a couple of months to see the contours of the real actions that the Trump administration takes. April 2nd is a very important date because reciprocal tariffs kick in on that date. So all those things are leading to the markets being really in a risk-off mode, and we are seeing selling happening.
Mr. Baga, let's talk about India. Indian markets seem to have bounced back from 22,000 levels. Do you still see that as a strong support for the Nifty?
Yes, about 21,900 was a very strong support, and we saw a bounce back coming from there. So 22,000 being a whole number. Normally, we do see there is some amount of support. For India, what is the good news is we have a strong macro and an improving macro. Corporate earnings have probably bottomed out in December. Come June, there will be a base effect of lower last year earnings leading to this year earnings looking better. Valuations have come down from very frothy levels to historical averages. So we can't rule out that the markets won't fall another 5% from here. Again, April 2nd will be a very important sentimental date because we are expecting some reciprocal tariffs to come on India as well. Like steel and aluminium have already come in last week, 25% tariffs. So markets will be on an edge going into the event of April 2nd. But overall macro better, RBI strong policies and strong measures to lift the market, and government spending catching up. That is helping Indian markets.
Mr. Baga, before I let you go, and this is very quickly, I want your very quick thoughts. What is your short-term and long-term advice for retail investors?
Short-term and long-term stay invested. Short-term, don't put in any lumpy money because we feel the market bottom might take till June to happen. So no lumpy money for now. Just stay in and long-term stay invested. Keep your asset allocation intact. Don't be bothered by the market gyrations.
Mr. Ajay Baga, it's good to see you. Thank you very much for all your insights today.
Thank you. My pleasure. Thank you.
For all the latest news, download the WION app and subscribe to our YouTube channel.